Welcome back to the Dividend Diplomats YouTube channel. You got Bert the Herd over here, and again, you got Lanny representing the Dividend Diplomats.
Love the flexing, Lanny, bringing me out that early because we are about to flex our muscles and talk to you about one of our top 5 foundation stocks that are about to release earnings this week. So everyone, you know the drill by now.
You know it.
Come on, smash that subscribe button if you haven't already. Give us that thumbs up so we can continue delivering you high quality information about dividend growth stocks to help you build your portfolio and one day achieve financial freedom.
In today's dividend stock, it's going to be an exciting one. To give a little teaser, the Mcrib is back, baby.
Oh man, the McRib.
Bert's favorite breakfast treat.
Yeah, breakfast, lunch, and dinner treat on top of that.
Look at this. He eats it when he goes to the bathroom.
Yeah, as they say, it's nothing like having a Jewish guy eat a bunch of McRibs every day.
And McRibs for days.
Yeah. In all seriousness, Monday, McDonald's is set to release earnings. So this video, we're going to take a deep dive into McDonald's, discuss some of the major news that's happened over the last few months, including the McRib news, and review some of their metrics to determine if this is a stock to buy to add to your portfolio.
Thanks, Bert. Again, McDonald's, one of the largest companies in the world. We all know the golden arches. You know, if you look at your dividend stock portfolio or even any mutual fund or exchange traded fund that you own, that covers a wide diversified group of stocks. McDonald's stock is usually one of the top holdings, or at least is a holding within that fund.
Yeah, it's going to be hard for you to find one that doesn't have it, to be honest, because it is such a great long-term dividend growth stock.
Now, McDonald's releases earnings on Monday, November 9th, and we are here to try to analyze and look at expectations. As Bert said, look at the news to see, okay, what is the impact to McDonald's earnings? And then 3, is McDonald's a stock to buy and a dividend stock for your portfolio? So we're going to cover all those bases right there and really dive into McDonald's to see if Bert's going to be happy with this meal.
I'm loving it, Lanny. So first, let's talk through McDonald's. One of the cool features about McDonald's is that both of us are shareholders of McDonald's. We both have the golden arches in our portfolio. So over time, we have built our position in this Dividend Aristocrat, almost Dividend King. For those of you that are newer to our channel, a Dividend Aristocrat is a company that has increased their dividend for 25 consecutive years, and a Dividend King is a company that has increased their dividend for nearly 50 consecutive years. So McDonald's is on the cusp of becoming a king. So that's why we have enjoyed having them in our portfolio and are lucky to have built our position years ago.
Now, last quarter, McDonald's increased their dividend, keeping that dividend growth streak alive. So how did McDonald's stock owners take the last quarter? Well, the dividend growth was actually, I think, slightly below expectations. They increased their dividend just over 3%, going from $1.25 per quarter to $1.29 per quarter. And then earnings and growth from that standpoint was not the best flavor for the shareholders.
Yeah, it was definitely below, and one of the things I was looking at with my expectations for setting their dividend was thinking through the pandemic and the impact it's had on dividend companies in 2020. What I've noticed is obviously a lot of companies, a lot of the major restaurant chains have cut or slashed their dividend. A lot of retail companies have slashed their dividend. And McDonald's is kind of in that unique position because they're not a formal restaurant that has a main dining room that just shut down. They still have their drive-through, and every time I've gone by a McDonald's since the pandemic started, the drive-through line has been wrapped around the store. So that's why in my head, I was expecting similar dividend growth to how they have had historically, because I'm still seeing these long lines and consumers going back and getting their share of McDonald's. That was why I was a little shocked when it was lower than their average.
But those that know McDonald's and know those long lines, they have the drive-through down to a T. McDonald's, you may see a line of 10 to 15 cars, but they get you in and out in less than a few minutes. So with their ability to advance in that standpoint, as well as their mobile app, which my wife actually used it just a few weeks ago, she said it was the easiest thing ever. She ordered from her phone, pulled up, and they just handed it to her.
Yeah, I've used it once or twice myself. It's very easy. And that's huge. And when you don't have a dining room open and it's all about speed and just getting people through the line, that's a huge technology investment that's going to pay dividends going forward for the company as well when we leave this pandemic.
Therefore, on earnings release for McDonald's stock and how they performed, I know built on the anticipation for McDonald's latest, earnings from last quarter, I believe they are resuming to that organic sales growth. And, given that they've been able to sharpen their menu, advance and increase their technology, and really get the pandemic drive-through, pattern and process down, I think has allowed customers to have an easier and even better experience at McDonald's. And, I expect, very solid sales and earnings growth this quarter.
Yeah, especially compared to last quarter. I couldn't agree more, Lanny. The last quarter was obviously the initial shock and awe of the pandemic and a company figuring out what to do to adjust. Now, a company like McDonald's that has mastered the fast food operations over the years has had time to adjust accordingly, as you said, and refine their operations to continue generating those earnings and cash flow. Like you, I'm expecting very strong results this quarter.
So not only have they been able to perfect that technology, but they did bring Bert's favorite sandwich back. It is back for the first time since I think 2012.
Yeah, they've had limited releases, but this is the first time
releases
nationwide that the McRib is back. And let me tell you, if you want to talk about what's about to bring a jolt to the company's top line, there is a cult following for this McRib. I'm not one of them, no matter how many times Landy says it. I don't like the McRib, but that doesn't stop me from talking about it and getting excited as a shareholder because there are going to be a lot of people lining up to order that.
So come Monday, I can't wait to see what McDonald's is going to release. Now the question though that you probably have is, okay, so they have, pretty much flat news last quarter, dividend growth, dividend increase of over 3% for McDonald's stock. Now with this better, I guess news previews that they've had where they're saying, oh yeah, we're returning back to growth plus the McRib, it's okay. What do you do as an investor? What do you do as somebody who's looking for a stock to buy right now?
Oh man, Lanny, if only there was just some way for us to analyze a dividend stock to see if it is undervalued and if there is a stock to buy. You're right. Do we know of a way to do this?
I think I know.
No.
The Dividend Diplomat Stock Screener.
Oh man,
we focus on 3 dividend stock screening metrics. We're going to look at the price to earnings ratio for McDonald's stock, take a deep dive in that dividend payout ratio.
Oh, we can't forget about the dividend growth history. And wait, we have 3, but for our videos, we always throw in that 4th bonus metric of the dividend yield as well. So we're going to look through that. We're going to run McDonald's through the gauntlet here and see, is it that stock to buy?
Now to start with their price to earnings ratio, the first Dividend Diplomat stock metric. Now, to get to the price to earnings ratio, you're going to take that share price for McDonald's, and then we look at that forward earning expectation for earnings per share. Now, for McDonald's, they're expecting slightly over $8 in the next year for earnings per share, and they currently trade at just under $217 from a share price standpoint. Therefore, that price to earnings ratio is actually 26 times earnings.
It's not the cheapest stock out there, but what's...
No, it's not. It's not on the dollar menu.
No. Yeah, this isn't their premium meals here. But what's funny is, historically, I would say 26 PE expensive. But when you look at the broader stock market, it's actually slightly undervalued compared to the S&P 500, which is trading at record levels right now. We've seen PE ratios for the S&P 500 regularly trading at 28 times earnings and above, spending plenty of time above the 30 mark recently. So there's a slight undervaluation to the market, but I would still look at it as a slight overvaluation to some of the other stocks I've seen out there.
So if you don't want to pick this off McDonald's menu, what about that second option, that second dividend stock metric?
Oh, the dividend payout ratio. Typically, when we're going through the dividend payout ratio, we look for a metric of under 60%. We think that this is a nice threshold to use to help you identify companies that have a relatively safe dividend that will allow them to grow their dividend going forward. So you take McDonald's current annual dividend of $5.16 and you divide it by that $8.33 of forward earnings Lanny used in the PE ratio earlier, and you get a payout ratio of 62%. So just a hair above our 60% metric that we're using. That, yeah, I mean, it's not 100%, so I'm not that concerned about it. There's still plenty of room, even though it's just a smidge above our 60%.
So not the perfect dividend payout ratio, but let's take a look at that third dividend stock metric that dividend investors and stockholders really care about, and that's that dividend growth, because you want that passive income, that dividend income stream to grow as you invest on your journey to financial freedom.
Yeah. So as I mentioned earlier, McDonald's is a dividend aristocrat. They're closing in on being a dividend king. So they've increased their dividend for somewhere between 25 and 50 consecutive years. So what's the number? They've increased that dividend for
45 plus years.
Yep. So they're closing in. They're going to reach dividend king status within a decade, barring a dividend cut, which is a fantastic long-term dividend growth streak. They've increased their dividend through many different economic cycles, and that's what we want to see for our passive income stream, growing through. Growing through good times and bad.
The golden arches, putting that golden stream of income to your portfolio, and they recently increased that dividend back last quarter by over 3%. I was expecting a little bit more just to keep that consistency in the growth rate, but maybe I was just too darn greedy, and during the pandemic, with COVID-19 expecting more, which, I think having lower expectations this year was probably the right thing.
I don't think it's greedy. I would say optimistic.
Sure.
That would be how I would assess what your expectations were.
Now, with McDonald's growth rate, though, on average, it's been pretty much all over the place. Some years it's 5%, some years it's over 15%. The 5-year dividend growth rate right now stands at just over 8%. Going forward into 2021, given the expectations are now slightly lower, maybe it's between 3 and 7% in 2021 is what I would anticipate.
I think that's a very reasonable.
But again, it's better than inflation. It's better than probably the raises that have been giving out this year at companies and corporations. So who wouldn't want that income stream to grow still?
Exactly, Lanny. So we'll see. Now that they have that strong dividend growth history, let's bring in our bonus metric, the dividend yield.
Bonus. It's like when they get a little extra fries in the bag. And
everyone loves that.
Yes. Yes.
Yeah, squeeze out a few extra ones. But
right.
Their dividend yield is currently about 2.4%, which is above the S&P 500.
It is.
That is above the yield on your savings account that continues to fall courtesy of Ally Bank and Capital One Savings, which is now probably about 0.65%.
Obviously much better than your 0.00000 probably one at JP Morgan Chase.
Yeah.
So hopefully you're transitioning some of your money into higher earning assets.
Yeah, so it's a 2.4% dividend yield it's solid. It's not AT&T. It's not some of those other high dividend yielders, but McDonald's has plenty of other reasons why their dividend yield is where it is.
So when we think about McDonald's stock to wrap up, we're expecting positive results on Monday, November 9th. They're going to have back to sales growth. The McRib is back on the menu for the first time in 8 years. The Dividend Diplomat stock screener metrics, if you want to give a summary there, Bert.
Yeah, their PE ratio is slightly below the market. Their dividend payout ratio is just a hair above our 60%, but we're not that concerned about it
just
right now.
Just a fry above the 60%
Oh, I like what you did there, Lanny. They have a very strong dividend growth history, albeit a slightly lower than expected dividend increase this year, but still above inflation. And their dividend yield beats the market and the savings rate on your savings account.
I know personally I'm probably not buying more stock right now at the McDonald's levels currently. I'm going to hold my position because I'm loving it every single time I get that quarterly dividend. But Bert, what are you going to do based on McDonald's upcoming earnings release?
I'm doing the same. I'm going to hold and see if there's a potential buying opportunity after the earnings release, and I'll reassess after. But at these metrics, I'm fine, and I'll continue searching for other undervalued stocks to purchase.
So leave your comments and feedback below about McDonald's stock right now. If you think they're a stock to buy, if there are better stocks to buy out there during this upcoming earnings release week, and what you're seeing in the stock market now that the presidential election is over. We would love to see what you have to say.
Yeah, and again, if there are other companies you want us to review, please let us know as well. We're always on the look for great dividend stocks that take a deeper dive and provide value to you as our viewers.
This is Burton Laney from the Dividend Diplomats.
Over and out.